In this video, we're going to look at how to read the market like a professional. There's a lot happening inside financial markets that you must be aware of. There are a lot of structural things occurring that if you don't know, you could be set up for a big, huge loss or an amazing opportunity. So in today's video, we're going to look through so many different charts, and we're also going to cover some mindset things that will really help to position you to take advantage of what occurs inside the markets. Let's run the numbers. If you've been doing your cheat sheet on the Tier 1, Tier 2 and Tier 3 charts, you already knew that a pullback was well and truly on the cards. We've seen the US 10-year and the US 2-year come up, as also has the DXY. When you're doing the cheat sheet, and a free version is available from ctksmethod.org, you understand how all charts are intercorrelated and interconnected. If the 10-year, the 2-year, and the DXY are going up, you would expect the S&P 500 and the Nasdaq, the stock market, to come down, especially Bitcoin and gold to be hit. And if Bitcoin is coming down, you can be pretty much assured that all of the alts are going to follow suit. It's pretty interesting. Today, Solana has been doing really quite well. But we know that no alt can escape Bitcoin's gravity. Let's look more deeply into the 10-year, the 2-year, and the DXY to figure out what could be coming next for the markets. First, let's look into the impact of what increasing yields and increasing dollar has done to the crypto market, and we'll look at what it's done to the stock market as well. We can see here clearly that total crypto market capitalization has been coming down. Now, what does this mean? And could we have predicted this with the CTKS method beforehand? A comment from yesterday's video from JT, as I saw total getting rejected from the $2.77 trillion mark and the US 2-year and the DXY going up from their SLs, I took profits and reinvested them 3 SLs below, since we haven't had a retest of the 69 and 67K until today. Buying on retracements can be really profitable, and JT made 7% in a 24-hour time period. Well done, my friend. Our community is a community of professionals, so we must read the market, not only time the market, but have time in the market. And Kacharia said from yesterday's video as well, I'm also leaning in heavily, but I have taken profit earlier when I saw the dark clouds on the horizon, the DXY, the US 10 and the US 2-year getting stronger. If you're new to the CTKS method, what we do is that we look at the Tier 1, Tier 2 and Tier 3 charts. The Tier 1 charts are the engines of financial markets globally. Looking at these major charts, you'll get a really good reading on where things can be going across Forex, commodities, crypto and major indices, of course including the stocks that make up those major indices. Now, how does it actually work? When you look at the US 10-year yield, this is like mortgage rates. The US 2-year yield is like savings rates. When the US 10 and the US 2 go up, what does it mean? The US 10 is the cost of borrowing. The cost of borrowing, when it increases, sucks money out of financial markets. And if the pesky US 2-year comes up, that sucks money out of the markets as well, because people can earn more money by putting their money into banks. What happens with the DXY is typically when the US dollar currency index is coming up, it's being backed up by increases in the US 10 and the US 2. You can actually look at the DXY as kind of like a flight to safety. You can think about it like this. When the DXY is going up, people are pulling their money out of stocks and other investable asset classes and just waiting on the sidelines, trying to determine what's going to happen next. The markets have been going absolutely gangbusters. They've been moving up and up and up. But even if price is moving up like this, it does have retracements along the way. Pretty much the markets are looking quite healthy, but that doesn't mean you're not going to get some pretty wicked retracements along that positive price path, because that's just how markets work. But we need to look more deeply. We need to look at the structural levels of the DXY, the US 10 and the US 2 and see if there are any positive fresh air gaps. They can be really problematic. Now, what am I talking about? When you get a positive fresh air gap, there's a level of structure and a level of structure above it, but a long way above it. If the US 10 moves explosively up and the US 2 moves explosively up and the DXY does as well, guess what's going to happen to the main markets? Guess what's going to happen to crypto and to commodities? This is why we must know the structural levels inside the Tier 1, Tier 2 and Tier 3 charts. Previously, JT mentioned about total crypto market cap coming into resistance. Let's pop on the indicator from the service. What we can see, structurally speaking, is that there was a level of structural resistance playing out at a little over 2.68 trillion. Total crypto market cap, that is, the entire crypto market, all of the projects in crypto, couldn't get above this specific level. Now we know that there are specific rules in the crypto market. If we can't get above a structural level, we're coming down to structural levels below, especially accumulations of structural levels. Then we would expect a bounce. If we get stopped out by another structural level, we're going back down. If we can't hold it, and you can see how price is getting contained in these areas, that's why you need to know where the structure is. Typically, most people look at a chart like this and they say, oh, everything is fine. It's going to, I pray and I hope it's going to come up. You can't pray, you can't hope, you must know. When it comes to interpreting these various levels of statistical significance, the one thing to be aware of, they're drawn out across all of price history, not just recent indicative price, but all of it. This creates the most statistically significant forward-leading indicator of price that exists inside the market. Now, what do we see now? There's a lot of structural overhead resistance from this point in price. This is resistance because these levels are above, from 2.54 trillion up to 2.58 trillion. And unfortunately, we're below. And even more unfortunately, we've been rejected. It is very likely that we could come up and retest the 2.54 and resume back down. Now, if that's the case, look towards your lower structural levels through the indicator. This is what the bears will be relying on, a breakdown in structure at that $2.54 trillion level. Now, why are we talking about the US 2-year, the US 10-year and the DXY? Because they caused this. The all-important question, what is happening with Bitcoin? We saw that total crypto market cap got up to an area, it just couldn't get above it, and it was rejected down. We're seeing a very similar thing happen with Bitcoin. And as Bitcoin has a lot of dominance in the crypto market, this is not surprising at all. Let's pop on the indicator so we can see these structural levels drawn over 5,200 days worth of data. We're looking for structural levels of support and for resistance. We can see that just like total crypto market cap, there was an area of structural resistance just below 73,600 that Bitcoin simply couldn't get above. If it can't get above, where's it coming? It's going to go below. And if it goes below, where's it going to next? The next area of structure. And we've seen this is exactly what occurred. We would expect, as anticipated, that even though we were dropping off, this level of structure would hold Bitcoin's price. And it did, just like magic. We're seeing something quite interesting in the variance between total crypto market cap and Bitcoin. Bitcoin is already above structural support levels around that 66,900 mark. There is always interdependency between different charts, and this is something to bear in mind. Bitcoin relies on total relies on Bitcoin. They're kind of one and the same, but they influence each other as well. You can see this structural resistance just stop that retracement and then shot it down to structural support levels below. And we did get a little bit of a wick down, but that was brought up relatively quickly. This 66,900 level is the one to watch. The bears will seek to get price below this 66,900 mark and decay it down, but there is structural support there. So what we'll need to do is to look into the DXY, the US 10 and the US 2. The bulls will seek to get Bitcoin's price above that $72,000 mark and upwards to 73,600. The one thing to bear in mind, the markets are in weekend mode. That means that the bulls could gain control over Bitcoin. After all, we haven't decayed below this 66,900 level yet. And we know the rules are really simple when it comes to structure. If it's not going below, it's going above. And if it's not going below, it's going above to around this $72,000 mark. This is a probability, but we must look at what the main markets are doing. Looking at the S&P 500, let's just get a check on the health of the main markets. These lines are very significant. They're the most statistically significant support and resistance lines in existence that you can put on a chart. And you'll see time and time again, they work like clockwork. They work like magic. When price is coming down, we expect this to act as a safety net. And it's already acted as a safety net on the S&P 500 at around that 5109 level. The bulls will be seeking to take it back to 5180, the bears to drive it below to 5085 or below. These lines have been drawn up in excess of 55,800 days worth of analysis. These are not normal support and resistance lines. In fact, they require 2 levels of standard certification to draw. Level 1 standard certification and Level 2 standard certification. Let's get into the US 10-year yield, and we can see that the US 10 is following the normalized positive price path at the current time. What really matters to us is where is the structure, so let's throw on the structural indicator for the US 10. We can see something unfortunate here. The US 10 has come into a structural level of resistance at this 4.32 level. It has a positive fresh air gap. Now this could decay the markets if we get above 4.32. I would suggest that you put an alert and in at 4.33. If this is the case and the the US 10 starts to just go parabolic, it could go up through this fresh air gap without resistance. This will put massive negative pressure and momentum inside the crypto space, inside the stock market and the commodities, so please be aware. And remember that the US 10-year has been trading since 1912. These particular lines, these SLs, have been drawn up in excess of 40,500 days worth of data. We need to look at the structure of the US 2-year yield. We can see that it's been coming up and up. It's been quite strong recently because the CPI came in hotter than anticipated. This means that the market is saying that the Fed is not going to ease interest rates. It's going to keep them higher for longer and less cuts throughout the year. It does that to suck the money out of the system, and in so doing, as there's less money following and chasing the same number of goods and services, the prices come down. That's how they seek to defeat inflation. We can also see through the service the US 2-year is following the normalized positive price path at the current time. We saw that the US 10-year yield had a positive fresh air gap. Let's throw on the structural levels, and these are across in excess of 13,000 days worth of data. What we see on the US 2 is a very interesting scenario. We can see it's getting caught between 2 levels of structure. Around that 4.74 is a positive fresh air gap above, but below 4.71 is a negative fresh air gap below. What we do notice is there's more structural support underneath than structural resistance overhead. This means that it's easier for the US 2-year to break through and to seek to go to 4.8. But that doesn't mean it's going to happen in the next 24 hours or the next real trading day. Therefore, I would urge you to put 2 alerts on the US 2-year, one at 4.75 and one at 4.70. If 4.70 gets hit, a rally could be incoming. If 4.75 gets hit, a decay in the markets could be really well on the way. Turning to the DXY, we've seen the DXY start to gain strength inversely to the weakening inside the markets. Are we seeing that the DXY could break down? If it breaks down, that is very positive for the yields to break down with it. We would expect not only the DXY to come down, but the yields, the 2 and the 10 to come down. But we know that's not necessarily likely at this point. It's more likely that the 2 and the 10 keep on increasing and drag the DXY with them. What matters for us is the structural levels, so let's just whip on the indicator. We do this because we need to know and understand where structure is. We're seeing a couple of things here with the DXY. The DXY is starting to consolidate. It's had a lot of problems trying to get above this pretty much where it is right now, this 103, 4460 level, but it has a positive fresh air gap above it. This is why you must know structure. If you just look at recent indicative price, just this area inside the window, it doesn't really give you that much of an understanding of what happened across the near past 21,000 days. We're looking at a positive fresh air gap, and we're seeing them on the US 10 and the US 2 as well. What does that mean? There is an increasing probability that the markets will start to retrace, and it could be violent. And if a violent retracement occurs, don't get panicked about it. Things are about to go on sale, and that's awesome, because just take a note that the DXY has a lot of structural resistance levels above it. This means that a filling of this positive fresh air gap into structural resistance would be enough to push the DXY back. This could create incredible buying opportunities if you're looking at these structural levels across the stock market, stocks and crypto, as well as commodities. I'd like to thank Gianluca for the incredible, beautiful comment. Have enough knowledge to overcome the fear of retracements. The CTKS service is the fast track to knowledge in financial markets. You're just gaining a little bit of a taste for what the service does, and you should be doing this each and every day. It will change your financial future. I'd also like to thank Sanjeev for his very kind comment. Sanjeev said, "It's so inspirational and motivating to see your trade levels and profits. Please keep on sharing. I would like to share a trade with you because I think it will really help." And Sanjeev said, "It feels like a Black Friday sale today. I woke up to many orders being filled." Well done, my friend. I'd like to revisit some of the Litecoin trading levels here. In Litecoin, from the service levels, we made a profit of in excess of $2,300. And when you understand how volatile Litecoin's trading behavior was, it was really volatile. I know a lot of people in the crypto market, they get very territorial about what they'll trade and invest in. That's fine. You can rule separate opportunities out or separate opportunities in if you like. But as a trader, I take every opportunity that's in the market. When looking at Litecoin from the start of the month, you can see that Litecoin decided to come down and then really come down, and it's been coming down and down, but it hit the positive price target. What you'll notice now, after hitting that target, what did it do? It came down, and that's exactly what we would anticipate things do. When they hit the targets, and especially if they hit the target very quickly, we expect price to decay after that. You'll notice that I'm accumulating at all these structural levels. I'm not afraid of the red. I love the red. It's the red that allows me to accumulate greater and greater positions inside anything that I trade. And then I'll just be looking, like Sanjeev said, to sell at a structural level that makes sense to me. I'd like to give a call out to TF Theta, who kindly put this comment in yesterday's video. The CTKS method provides the necessary X-ray vision to overcome fear. Overcoming fear is vitally important when the markets go red, and let's just see how red they are. What institutions want to do, they want to drive the price up of various crypto projects and stocks and commodities, only to make sure that they fall, to scare people out of the market. They use people as exit liquidity. So as they're driving the price up, they know as soon as the price goes red, people will automatically sell into their loving arms. We've noticed that the meme coins have been going absolutely parabolic just recently. Also, AI under blockchain services has been doing really well, but they've been severely hit. If you thought that meme coins were an absolute bargain when they're going up, how much more of a bargain can they be when you're getting them for a discount? Or if you were looking at the AI space and saying to yourself, I really want to get into AI, and it was just going up and up and up, you must be thrilled with this market price action. If you know the price is always moving in waves, you're not thrown about by this kind of turbulence in the sea of price momentum. Instead, you're applying Rule 621, buy on red, sell on green. You understand that the money is made when you get on the right side of the percentage. And those eagles that you see in the comment, they're all about Borsog. And lots of love to everybody who makes comments and watches the video. Kate and I are so appreciative that you're here, sharing this time together. I always recommend that unless you are a master of buying at spot, please do not leverage trade, because if you don't know what you're doing, you're going to join the ranks of these people who get liquidated far more quickly. Even professionals can get liquidated, but people just starting up can get, well, it's almost guaranteed that you're going to wipe out your account under leverage. You need to know what you're doing. And with the last 24 hours, we've seen literally $630 million worth of positions get liquidated. And on the long side, they were the majority. But the shorts didn't escape liquidation either. They also got liquidated. So you can go long and short, and you can be liquidated in both sides, in both directions. We can see that Solana shorts have been liquidated over the past 24 hours. That's causing the price of Solana to come up. Front and Jupiter have also been doing pretty well. Over the past 12 hours, Bitcoin is getting liquidated from the short side. 4 hours. What do we see? Bitcoin liquidated, and now the shorts are having their turn because the market's becoming bearish. If you look around all the different YouTube channel thumbnails, they're all, the crash is in, the crash is in. Yeah, it's price moving in a wave. If you've been following the channel over the past couple of days, you were already advised that the US 10, the US 2 and the DXY could be creating some problems, could be brewing some issues, and that's unfortunately exactly what happened. But it realistically depends. Are you an investor or are you trading? What do investors do? Investors buy and investors sell. What do traders do? Traders buy and traders sell, but they tend to do things differently. Investors tend to get in when the price is going positive because they feel very certain that it's just going to keep going that way. Traders tend to invest or trade or swing trade as the price goes under retracement because they want to get a good bargain. They want things to go on sale, and they know the market dimensions and how the market is moving. Traders are very sophisticated because in order to time the market, you must look across the tier 1, tier 2 and tier 3 charts. In truth, if you're an investor, you need to do that too, or you could end up buying at the top and selling at the bottom and doing it continuously, because the concept of buying at the bottom tends to keep a lot of people out of the market. Don't worry about tops and bottoms, worry about participation. I would really recommend that you get familiar with the tier 1, tier 2 and tier 3 charts. There's a free timing cheat sheet at ctksmethod.org. You can just download that and just get used to looking at the tier 1, tier 2 and tier 3 charts. It will be a game changer for you. As a community, we focus on scientifically understanding market price action. We know that it's the weekend and the DXY, the US 2 and the US 10 have stopped trading. We also know that this structure hasn't been retested as of yet. What you will find across many markets, people are feeling increasingly bearish. They think the markets are going to melt down. And there is evidence of that with fresh air gaps across the DXY, the US 2 and the US 10. So keep your eyes on those. But it doesn't mean it's going to happen instantaneously. And in fact, across the weekend, the US 2, the US 10 and the DXY have gone to sleep. They're gone to bed. But crypto is out partying. And what is the party inside crypto at the current time? You saw from that heat map of liquidations, they're just destroying the shorts at the current period of time. And this is in accordance with structure. You will find if you know the structural levels, it's an absolute game changer. But you need to know how the structural levels interact with price and what it means. If you can't get above, you're going to the confluence of structural levels below. As you're putting in the time and effort and energy, especially on the weekend, I want to thank you for that, and I'll show you the Ethereum structural levels at the current time. This is a bonus just for you, and you can see when Ethereum came down, it required a lot of safety nets, aka structural levels, to hold price and rebound it. This is what we would anticipate. We would anticipate price to go flat along this area. At least the DXY, the US 2 and the US 10 are not trading. And we can see that that liquidation of shorts on Bitcoin is pulling up Ethereum into structure. If Ethereum reaches above 3760, it's creating a bullish case, and a positive fresh air gap could see Ethereum rallying across the weekend, much to the demise of the bears who would say, no, it can only go down from here. Make sure that you are very flexible in your approach to the markets. When the markets open on the next trading day, when the DXY starts to trade either up or down, the US 10 and the US 2, they start to trade. Well, that's a different scenario, but we're in the weekend. So the weekend, anything can happen inside crypto. That's why your observance of structural levels is the key to bear in mind. Also use your three-dimensional risk management. Don't get caught on one side of the trade. Understand the price is always moving in a wave. You have to have wave-based thinking to understand financial markets. You can't just say it's got to go up or it's got to go down, because you know even if it's coming down, it doesn't mean that it can't go back up, or if it's coming up, it can't go back down. But Ken, I want certainty. I want to know 100%. What's the target price? The target price is always a structural level. A lot of people are interested in Solana, and when we look at Solana, Solana's been doing so well. It's bucked the trend. It's bucked Bitcoin's gravity. But has it? No, it hasn't. It's still moving with Bitcoin's gravitational alignment, going down when Bitcoin comes down and going up when Bitcoin comes up. That is just a surefire rule. But it's overextending the upside momentum moves. Fantastic. But what is structure telling us? And as you've stayed to the end of the video, I would love to share it with you. Structure is incredibly powerful when you can see that we've had all of this structural underneath support, and we've managed to get above and form higher lows. This is a low, this is a low, but this low is higher than that low. That's why this low is called a higher low. As we're forming this, that's looking really good, and we've now created substantial structural support below Solana's current price, and these lines are drawn up across in excess of 1200 days of Solana's price history. So these are not just lines drawn on a screen. These are the most statistically significant support and resistance levels you will ever see on any chart. This is why, when we look at them, we expect reversals around these particular structural levels. Or we expect price to go flat. And you can imagine if you were trying to look at Solana's levels without the indicator, without the CTKS method, it would mean that you're looking at price like this. Now, the problem is that you can't tell where price is going until it goes there. If you're drawing up recent indicative price, you're just going to find hills and valleys based on what price has actually been doing. And you effectively say, This past week of trading has been the most significant week in Solana's life of trading. Well, it's not actually. All of price history is Solana's most significant period of time. That's why when we draw up the CTKS method, we're drawing up all of price history because we need to know. We're scientists on price action. And when we pop in the levels, what we're effectively doing is saying, we know that there's a lot of overhead structure, so Solana's price could decay through that. We know where the structural resistance levels are, so we can trust in those. We know as structure is hit, especially from one area, a fresh air gap with a lot of underneath structural support, it can move very, very quickly because it's got so much support in this area. The question is, were you buying Solana as it came down through these SLs? Please let me know in the comments. In yesterday's video, I explained that fear is inversely proportional to returns. For example, if you have enormous amounts of fear, your returns will be very, very minuscule. They'll be tiny. But you can't gamble. If you gamble, you might say, I have no fear at all, so therefore my returns can skyrocket. The greatest misconception is the professional gamblers gamble. They do not gamble. Gamblers who are professionals know when to cut their losses. They know when to not play a hand. They're not reckless. They're mathematical by nature. So for example, gambling always is the thrill. And the thrill is the thing that will kill your financial accounts. Instead of gambling, just say that you're a student of the markets, that you want to understand what price action and momentum actually do in practice. Don't be in it for the thrill, be in it for the learning, and you will find that you will do incredibly well over time. But it does take a while to manage your fear. The fastest way to manage fear is just say, I am dedicated and committed. I win or learn and never blame. If you're learning, it means that you can do better the next time. If you're blaming, it means you're getting angry and you will suffer increasing losses. This occurs right across life. It's not a thing to do with the market. Every time you get angry, every time you lash out, every time you find fault, you're actually creating losses in your own personal emotional bank account. Therefore, we need to move away from blame, which always externalizes a problem, and move into learning, which empowers us. You must always be empowered. When you learn, you're putting money into your emotional bank account, and that learning will set you up for winning. Not every time. We don't win every time, and we don't need to. We just need to get up when we're put down. Or I could say pushed down. And if you've been going through a life pullback, please know that's giving you strength for your next life rally, and I'm so happy to hear that Tails is feeling better. We are not in competition with other people. Competition always comes from a scarcity mindset. A scarcity mindset is always born of lack and limitation. If people feel lack and limitation, they cannot do this. They cannot show kindness, they cannot show integrity, and they cannot show gratitude. Why can't they do that? They're in survival mode. And when you're in survival mode, kindness and gratitude are the last things on your mind. After all, everybody's out to get you. No, they're not. Nobody is out to get you. Another person's success is not your loss. When you think from lack and limitation, you'll find that you just can't make the life that you want to make. You need to think from a position of abundance. Always hold your three-dimensional thinking and know that opportunities in life reset daily. And the universe, life, wants you to succeed, and you can succeed. It's important to always understand how truly special you are. In the history of the world, there's been no one like you, and there will never be another person like you, forever and ever. That means that you can show kindness and authenticity. Don't show authenticity through nastiness. That's not a way to go, because when you do that, you create inner and outer conflict. And when you're creating inner and outer conflict, you can't manifest the destiny that is waiting for you because you're doing it from lack and limitation. Instead, focus on your learning, have humility and patience as you go through your journey in life, and you will find, with positive excellence, that what you become is far, far more important than what you get. Maseratis and Ferraris don't mean much if you're lying in a hospital bed. Multi-million-dollar mansions don't mean much if you don't love the people around you. Instead, try to make meaningful connections with those around you. That's the source of true wealth. As human beings, we're meant to connect, and one of the best ways that you can connect is just simply through gratitude. Honestly and authentically be grateful for the people in your life. This is not weakness. A lot of people think that gratitude is weakness. It's not. It's just honoring other people. And when you're grateful, you open up happiness. Happiness is always inside you. You cannot find it externally. You can find pleasure externally, absolutely. But pleasure is just fleeting. Happiness is permanent. Because it is literally you saying to yourself, I'm cool with me. It's so important to know how special you really are. There's a lot of people out there that will try to make you less, but you're not less. You're much, much more than you could ever think. I would suggest, just as an exercise across the weekend, be kind and be grateful to those around you and those closest to yourself. And even, of course, to strangers. And please let me know in the comments, does that create happiness for you? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.